When I first started investing, I was into commodities, so gold and silver. And one of the things that made me really frustrated with investing in gold and silver was the fact that I couldn't see a distributed ledger. I had no idea how much gold and silver actually existed. I mean, I've heard like statistics of how much gold and silver were out there, and I've heard how much gold and silver big banks had, but I never really knew. We never knew. And towards the end of my career of that, of investing in gold and silver, I realized that there were reports of 1,000 to 1 paper ounces, which is like an IOU, to physical ounces of gold and silver. And that rubbed me wrong because I'm like, well, wow, banks can manipulate this all they want. Now, going on to Bitcoin here, this is really interesting from Mike Alfred. He says, Wall Street doesn't understand Bitcoin. Market makers and hedge funds that think they can shake out long-term Bitcoin holders out of positions are in for a rude surprise. They will try their usual tricks with Bitcoin ETFs and they will not work. You cannot manipulate absolute scarcity. And that's the greatest thing about Bitcoin is that there's going to be a ton of manipulation. We've onboarded BlackRock. They are the worst manipulators on the planet. But you know what they can't manipulate? On-chain data. You can't change the distributed ledger that Bitcoin sits upon. That is the beautiful thing about Bitcoin. And that is why I'm so bullish on this space. You have no idea. Well, actually you do. If you're a CT Club member at learningcrypto.com, you will know how bullish I am on Bitcoin and a lot of other coins. Let's go on to the actual manipulation. CME futures right now experienced its second largest weekly sell volume ever, second only to the FTX collapse. It is the third largest volume week overall, with 2019's downtrend break being the driving factor in second place overall. And so I think what you're going to see now is the worst manipulation ever. I don't think that we're going to see prices drop, 40% anymore. That's just my prediction. I could be completely wrong, but I don't think that there's enough Bitcoin to go around because of hodlers like me and many others, Michael Saylor and so on. I think that we are going to experience some very fast spikes down that could be 10 to 20% probably, and maybe a little more, but I think that's probably it. But they're going to be so fast that retail and other investors aren't going to have time to buy that. And there's a reason for that, because BlackRock and friends want to buy as much Bitcoin as possible. Why? Because they can't print it. And Morgan Stanley knows that they can't print it either. They actually said Bitcoin and crypto could significantly reduce the US dollar dominance. I absolutely agree with this bank. They 100% got it, but I don't trust them. They're saying this is probably because they have their bags all packed. Speaking about somebody that doesn't have his bags all packed, Alex Mashinsky, the former CEO of Celsius. You're going to get a kick out of this one. Sorry for making fun of this guy, but Alex Mashinsky has failed to pay his lawyers, which are withdrawing from the case. That guy, geez, man, what a rise to power to nothing. Oh man, he's gotten drowned by what has happened. This is pretty horrible. I feel really bad for the investors too that actually trusted Celsius. Ugh. And lastly, let's cover the last thing that we've heard from Vanguard's CEO, saying that customers should not put Bitcoin in their portfolio because it has no intrinsic value and it has no cash flow, even though they are the largest investor in Bitcoin mining in the US. So the moral of the story is, don't listen to what they're saying. Look at what they're doing. That's what you should do with politicians, with everyone else, right? Because actions speak much louder than words. That's all I have. Please like and subscribe. And if you want to see what we are doing with our crypto, learningcrypto.com, home of the CT Club. Bye-bye.